Hi, this is Richard Sienna. I thought I would do a video today on entrepreneur basics. It's a little bit different than my usual ones that I roll on meditation. I get a lot of people coming into the store and they talk about wanting to start up a business or go into some little venture like that, and I end up explaining to them a number of different things, and some of which is in this video. And I thought I would just create a video on what I see it as the things you need to know as an entrepreneur in order to get started. So here's a little bit of my background. I graduated Hofstra in 1980. I have owned a theatrical lighting company, a musical instruments accessory company. I currently own a gem and mineral business. I've owned several different computer programming businesses. I've done military and commercial consulting. I've been involved with a number of different startups. I've been involved in companies that did technology and CTO, or Chief Technology Officer, outsourcing. I pioneered the concept of a virtual CIO or CTO. I've designed social networking software for business-to-business applications. I've been a CTO at several different companies. I've worked in Fortune 500 companies. I am a meditation instructor and a meditation researcher. I do a lot of research in the field of health and nutrition. I am a jewelry designer and I teach jewelry design. I'm a past member of the Professional Photographers Association of America. I'm a NAUI, a National Association of Underwater Instructors. That means I teach scuba. And I'm an active leader in the Boy Scouts. So what is an entrepreneur? Well, an entrepreneur is a person who solves problems and, in my opinion, takes on a risk. Now, what does this exactly mean? It means you like to solve problems for your customers or for other people, and you're not afraid to take on the risk of doing so. Now, that risk could be in the form of buying an inventory for a store. It could take on risk as far as putting money into developing programs or applications that are haven't been done before and that are going to take you a little bit of time and effort in order to get them going before you actually start getting paid on the product. So you're basically taking on risk and in the process solving problems. So what are you going to do as an entrepreneur? Is this going to be something you're going to do part-time? Are you going to do this full-time? Do you have money to live on while you're creating your product to sell? Because you may not actually get any cash flow or income from it for some time, depending on what the product is. How much can you invest on a personal basis? Is your family going to be protected? You'll be able to cover your expenses until such time as income starts coming in. Do you have a business plan? Did you write a business plan? If you don't know what a business plan is or haven't written one, I would suggest going to the library, looking up how to write a business plan, or searching the internet on business plans and seeing what that encompasses. Now, business plan, even if you're not going for money from the outside or from someone else, it's a good thing to do because it's basically you're writing down your goals and you're writing down what your business objectives are. And there's a number of things: how you're going to get started, how you're going to finance it, when you're going to start doing different things, when you're going to start to put marketing in, etc. And in addition to that, then, in addition to the business plan, you should be writing down specific goals that you want to achieve. And then, what is your exit strategy? When are you going to end this business? When are you going to get out of it? If you're successful, maybe your plan is to build the business up and then sell it. If you're unsuccessful, how much time and effort and money you're going to keep putting into it before you say enough is enough. And that's an important thing to identify up front, that you need to get in your mind, so that as you're going down the road and you're investing into whatever your business is, you know if you're going to continue it or if you're just going to keep putting money in, and then one day you have no money left to put in. So it's best if you look at that up front. It's okay to change your mind later on, put more money in if you reach certain milestones, but it's something that you should be aware of, and you should have at least addressed to yourself to say, at this point is when I'm going to stop, and this point I'm going to keep going on. there are a number of things that are really good to have that I would consider must-haves. One is you need to have a good lawyer, you need to have a good accountant, and you need to have a good banker, or at least someone who understands the financial aspects of what you're getting into. Now, a good lawyer, there's a number of things you want to look out for here with a lawyer. One is you want to interview the lawyer. You want to ask them for a list of references, make sure they have clients of similar size to yours and to who you are and larger. Make sure they have business experience and some trial experience. Now the reason for this is if you go to any lawyer, and you may have used a lawyer if you did a closing on a house or something like that. A lot of lawyers specialize in things like real estate law, and they've gotten into that because they needed to make money, and that's where the money was to be made. Nothing bad or good about that. Now, when you go up to a lawyer that you know, and you say, "Gee, I want to start a business," they're just like everyone else, looking for other exciting things to do, and they can help you, and they may know something about it. But are they the right person for you? Do they have clients who are in an entrepreneurial business that they've dealt with? Do they know what to expect? Is that, or are they learning just as you're learning? And that's, you don't really want that. You want someone who's got a little more experience than you do, because you're going to need that later on. Now, this lawyer may help you out with specific things, legal matters and whatnot, but you want to consider them a general counsel. So if you need to go to a specialty lawyer, then you have he's going to be the one who's going to help you find that. For example, I have a friend who is an employment lawyer, and that's what his specialty is. He deals with all sorts of employment issues, and he can tell you, keep you roaring over dinner on some of the cases he's been involved with. I mean, they're just not to be believed. So the golden rule, and this is why you need to have a lawyer before or as you're getting started, because anyone can sue anyone at any time for any reason. And when you go to a lawyer and you say, "Gee, I'm being sued," the lawyer's always going to say, "You have a good chance of winning this case." Okay, well, that doesn't really mean anything. Now, you want to remember that you do not want to get emotionally involved in the issue. It's business. Getting back to my friend who's the employment lawyer, he's had several customers who have been sued because they fired an employee, or an employee quit or whatever, and they came back and sue him. And he's called in to deal with the situation. And the customer inevitably says, "I'd rather put your kids through school than pay one dime to this guy who's suing me." Well, a year and a half later, and $100,000 in legal expenses, all this customer can say is, "Get me out of this case. I'm tired of putting money into it, and get me out of it." Meanwhile, if they had just negotiated with the person, because all they're looking for is some money as a settlement, that's why they're suing, maybe they would have paid $5,000 or $10,000 up front and gotten out of the situation, and then moved on. Now, that's not something that you want to do, but look at the downside. You could have paid this guy $10,000, or you could have saved yourself $90,000. Which one do you want to do? Now, when it comes to contracts, you're going to be signing all sorts of contracts. You're going to have contracts for partners. You're going to have contracts for people who work for you. If you go and you have products designed or whatever, you're going to have all sorts of contracts. You're going to have real estate contracts if you have a rent. So you're going to need a lawyer to look all these different kinds of contracts over. My advice is that no matter what the contract is or who's giving it to you, you want to make sure you read every line of every contract and question everything that you don't understand. Okay, now when you go to read the contract, depending upon the person who's giving it to you, they're going to say, "Oh, it's a standard contract. Nobody ever reads these things, they just sign them." Well, there is no such thing as a standard contract. Okay, and I read all the contracts that I sign. Now, if you feel pressured, it's really okay, and you really, the best thing to do is say, "Well, I can't sign this without letting my lawyer look at it, because he's going to yell at me if I sign it and he doesn't look at it." You just blame it on him. You'll get out of the pressure situation. Give it to your lawyer, read it over, make sure it's right for you, and it's not just some it's not something that you're getting into that you're going to have legal help to get out of it later on. Now, your accountant is similar to the lawyer. You want to ask for a list of references. You want to make sure they have other clients of similar size and larger. You want to make sure that the accountant is using accounting software that you can buy and you can use on your computer. Something like I use something called QuickBooks, which is what most of the accountants for small businesses are using today, and it's very good. And the advantage to that is I can put it on my computer. I can get it for about $500 or so. I put it on my computer. At the end of the year, when I do my books, I can export a copy, send it to the accountant. He does his stuff to it, sends it back to me. I can re-import his changes, and we're good to go. So he's in sync with you, and it becomes very easy to transfer files like that. If you write all your accounting information down in a checkbook and then you send the checkbook to the accountant, he's going to have one of his guys, or he's going to have to sit there and manually input all this stuff in. It's going to cost you extra money. So if you do it yourself over the year, as you're writing your checks and whatnot, it basically becomes like a checkbook registry. And with a little help from your accountant, who can help you set up the QuickBooks for your business and then teach you how to put all the stuff in, at the end of the year, he just needs to do what he's best at, which is review your books, take whatever information he needs, put it into your accounting, put it into your tax returns, and then file your tax returns. It becomes very simple for him and very simple for you. You need to know their job, and this goes for a lawyer also. You need to know their job and what they're doing, even if you did not want to do it yourself. So you should be aware of what the accountant's doing. Doesn't mean you have to be an expert at financial matters. It doesn't mean you have to be an expert in law, but you have to understand what they're doing. And because a lot of times you're going to make suggestions. Why don't we approach it this way? Why don't we approach it that way? For example, I had an accountant a few years ago, which I don't use anymore, and I had bought $5,000 worth of computer equipment or something like that, which is considered a capital expense. Now, when at the time, I think there was a $10,000 or $15,000 of capital equipment deduction you could take on your income taxes for a corporation and for personally or something like that. And I think now that's up to about $100,000 or $150,000. Now, what that means is that if I bought a computer, which is in standard accounting practices is with 3 to a 5 year depreciation or write-off, then with the capital equipment expenditure, I can write that off in the first year. So if I spend $5,000 and I made $6,000 in profit, guess what? I only made $1,000 in profit after I took the $5,000 deduction off. Okay, as opposed to depreciating it over 5 years and only being able to take $1,000 a year off my income for that year. So little things like that, you need to make sure that the accountant is doing his job. Now, when I brought this up to the accountant a year later, I said, why didn't we take this as a capital equipment expenditure? He's like, oh yeah, I guess we could do that. And then he took it the second year. So it didn't help me the first year because it cost me money to do it. And it's always better to have your money today rather than tomorrow. Okay, your banker. Now, your banker is going to help you with understanding the finances of your business, the cash flow, and investing. Your accountant will also do that, but the banker is more or less if you need to get loans or if you need to do investing with money that's coming in, short-term investing or something like that. The banker is going to help you with that. So understanding finances and with cash flow is going to be a banker. And you want to start to, as you start to grow your business, you want to start to get rapport with your bankers and your accountants and all the other people you're doing business with, because if you need to get a loan, you want them to be familiar with you. If you've been in business for a year, okay, you're working and you're doing something, you want them to know who you are, so that if you need to go into them and ask for a loan, then they're going to understand what your business is. You don't have to educate them, and they don't have to become comfortable with you. It's just like building a credit rating, only you're building a personal reference rating. Now, you also want to build a credit rating for your business by getting a checking account and maybe getting a credit card for the business, and maybe taking a small business loan or something that you're paying back to establish credit for the business. I had a business a number of years ago which ended up closing, and when I closed it down, I had an excellent credit rating. Banks were coming after me for the business to loan the business money, okay, as opposed to loaning me money personally, because of the credit rating I had established with the business. So it's really a good thing to work on. And your banker will help you do that, or at least explain to you how to do that. Now, is this a business or a hobby that you're creating? It doesn't matter what you consider it. It matters what the IRS considers it when they audit you. Now, the differences between a business and a hobby is it used to be if you made money 2 out of 3 years, it was a business. If you had 3 years worth of losing money, they considered it a hobby and wouldn't let you take deductions until you made a profit again. In addition to that, you need to keep a lot of records, and you need to make sure that you create business entities and whatnot. I'll get into what that is in a minute. But you need to keep records of your business. So you need to have a record of all of the sales, all of your expenses, and where all the expenses, where all the money went and where it got paid to, if it paid people, etc. Now, there's something called commingling of funds. And what this is if I go out and I decide I'm going to start a business to sell some product, and someone pays me $1 for that product, and I take that dollar and I put that into my personal bank account, and then I take money out of that personal bank account and I pay a bill with that for the business. The IRS considers all the money in that bank account to be the property of the business. So if you had $10,000 in an account and you put $1 into the bank account, the IRS is going to say that $10,000 is part of the business. I don't care where it came from. It's income to the business unless you can prove otherwise. So the best thing to do is to create a business entity, make sure that you have separate checking accounts and separate savings accounts for the business, whether if you're whatever type of business you are. And then if you keep records of dedicating specific hours to your business and create a business entity, this makes it a business instead of a hobby, whether you're making profit or not. But of course, making a profit never hurts. Now, what is a business entity? There's several different types of business entities. I'll get into a few of them here. There's more business entities. Again, your lawyer and your accountant can help you decide what's best for you. There's business entities that have something called liability protection, and then there's ones that don't have any liability protection. What this means is that if you create a product and someone decides to sue you for the product because of some reason, then they can sue you personally if you have no liability protection. So companies with no liability protection are sole proprietorships or partnerships. That means if they sue you, they can come take your house, your car, or whatever if they win the lawsuit. Corporate entities that offer liability protection are corporations and LLC companies. Now, corporations come in many different styles. That's the one I use the most. That's what I would recommend. They become their own separate entity, and they're fairly easy to manage. And again, your accountant and your lawyer will help you set them up and get that started. For a corporation, there's several different types of corporations. I'll just name 3 of them right now. There's what's called a C Corp. Well, that's a full corporation. That's like the corporation that you see when you buy stock on the New York Stock Exchange. They have shareholders and whatnot. Now, as a small person, you can elect for a C Corp, or you can go for something called a Subchapter S corporation. Now, Subchapter S means that it's a special election that you take when you create the corporation. This needs to be filed within a 30-day period or something like that. And again, your accountant would help you file those. There's 2 or 3 filings that I believe need to be set up. And the Subchapter S says all of the profits for the company go onto your personal income tax as personal income. So what that means is that if there's no double taxation. If I have a full corporation, I pay corporate tax, and then I pay myself a dividend, and then when I get that dividend, I pay income tax on the dividend, or if I paid myself a salary, I pay income tax on that. Now, even if you're a Subchapter S corporation, you can still pay yourself salary. A nonprofit corporation does not mean that you didn't make any money. It means it's a specific filing. Like if I would, for example, most Boy Scout troops are 503c corporations, which means that they're in business not to make a profit, but to help some benevolent organization. The Knights of Columbus, the Lions Club, those are all examples of nonprofit corporation. The Red Cross is one, and any companies like that. They're in business to help the community as opposed to in business to give the shareholders revenue. And then we have LLC companies, which are called limited liability companies, which when they came out, there was some advantage to it. I've had one or two of them. I didn't find really any advantage over subchapter S corporation. But again, you need to talk to your accountant about that, and he would steer you. If you have multiple partnerships, multiple partners rather, an LLC may be attractive. Like I said, it wasn't. I didn't find any big deal for it. There's some books out there. I read a book years ago called Ink Yourself. I don't know if it's still in print, and that went through the reasons why you'd want to incorporate various different kinds of entities that you may want to do, and how you can handle all your expenses and all that other kind of stuff through the corporation. You can set up your corporation with a lawyer. My experience has been anywhere from $750 to $1,500 for a corporation or to an LLC. If you go through something called the company corporation, or I think it's www.incorporate.com, they will help you, or they have a website, and you can go there and you can set up a corporation in any of the states, and they're fairly good. They do the basic stuff, and they'll tell you what kind of kit you want, and it's usually anywhere from a couple $100 to around $500 to set something up. Setting up a corporation is pretty standard. You don't necessarily need a lawyer to do it. Of course, the lawyer gets mad if you use something like that because it's eating away on his profits. But money's tight in the beginning, and that may be something that you want to investigate. Registering. Now, after you create the corporation or you create a partnership or whatever you're going to do, you need to register with the state. That's basically when you create the corporation, you're registering with the state. And then you may also need to call them up and get different numbers from the state. You need to call up and register with the federal government to get what's called a federal tax ID number, or an EIN, which is Employer Identification Number. Then you need to register with the states if you're going to collect sales tax for whatever state you do business in. Some states, if you do business there, you need to register as a business entity within that state in order to do business. Currently, I'm doing business in, I don't know, five or six states. So what happens at the end of the year is I need to file corporate tax for the 5 states, and I need to file personal income tax for the 5 states, and sales tax for the 5 states. So it becomes an accounting nightmare here, so to speak. But I need to do a certain minimum business in each state in order to become worth it. If I'm not doing a minimum amount of profit in that state, then there's really no point in working there, because all I'm doing is paying taxes on it. But you need to, something you need to consider. Okay, cash flow, budget versus expense versus income. Now, cash flow it's a track of all the income coming into my company and all the expenses that I have. So let's just say, and this gets down to making a budget and then looking at the expenses over the income. So I create a budget at the beginning of the year. I list all my months, and I know in February, June, and what is it? It's, I don't know, every 3 months I need to pay sales tax. 3 times a year I need to pay employment tax. I need to pay estimated employment tax if I'm doing something like that. I have insurance that I need to pay 3 or 4 times a year, depending upon how I buy the insurance. And I have a whole mess of other expenses that I know are coming: phone, rent, utilities, all that kind of stuff. So if I put that all on a piece of paper, I know exactly how much money I need in order to exist, just to keep the doors open in the business. So for example, in the store that I have, I need X number of money I need to have I have a certain expense level for that. So let's just say, off the top of my head, it's $5,000 a month in expenses. I know I need sales to give me profit of $5,000 a month in order to keep the doors open. If I have sales that are only making $4,000 a month in profit, then the doors aren't staying open that month. I have to put money in order to stay open. Okay. Now, what are your other expenses? Well, your other expenses are, now that I know it's going to cost me X number of dollars to keep the doors open. Now I need to buy inventory, and I need to do, I need to get equipment, like maybe I need a cash register, I need credit card machines, I need pens, papers, whatever. Those are all other expenses that aren't necessarily expenses that are going to come on a monthly basis, on a regular basis. They're just expenses that I incur over the year. Funding. So you started your business, and now you need to get, or you're thinking about starting a business. Now you need to get some money in order to keep the business going, or in order to run your business. Now, some businesses are very quick to make money. I open up a store. I'm going to expect on month 3 after building the store out, I'm going to start having people come in and make sales and whatever. How am I going to get that started? Am I going out and getting loans to get the business started? I've heard stories where people mortgage their house to start a business and all sorts of things like that. Or do I have the money in my savings account that I can do that with? Am I using OPM, which is other people's money, in order to get started? Now, there's pluses and minuses to this. Other people may want to invest in your company, but if you don't make money, then you lose all your friends. So it's a two-edged sword there. Are you going to fund it yourself? Do I have enough money in the bank to pay for the business, as well as all the expenses that I have personally, and to keep my current lifestyle of living up to where it is? Okay, if I have a family, they all want their new latest electronic gadget and new toys, and they go into school and they need clothes and they need to eat and whatnot. I need to take all that into consideration. If you're getting up to a larger type of investment, in a larger type venture, where I'm dealing with, I'm creating a company that I expect to be worth millions of dollars someday, then maybe I'm going after something called an angel investor, which is going to be someone from the outside who puts a lot of money in, and he helps the company get started, but they also take a large portion of the company. Do I go to family and friends? Do I sell stock to strangers? So these are all things that you need to consider. You really need, if you're going to do any of those, you really need to talk to your lawyer and your accountant and make sure that everything that you're asking for is legal, and you're protected personally, and then your investors are protected also. Okay, so we're up to cost of doing business. Now, as you can see, there's a lot of expenses when you start to do business. There's company setup fees, anywhere from $100 to $1,500. Accounting fees, my experience is they range anywhere from $400 a year to $2,000 per year. If I go out and buy QuickBooks software, it's going to cost me around $500. If I open up a checking account for the company, which I recommend you do, it's going to cost anywhere from free to $200 per year. On average, you need to talk to your different bankers. Again, if you go to some of the banks, you get free checking for the first year, or free checking for the first 2 years for a small business. There's all sorts of deals. You may need to buy stationery. You may need a web presence or an internet presence. And that could cost you anywhere from $10, per month to $1,000 per month or more, depending on what you're doing. You may need phones. You may need a computer. You may need credit card machines. You have to put money into marketing if you're going to be selling stuff. You may need transportation. You may need to buy a car or a truck or whatever it is you're doing. If you buy inventory, that's part of your cost to open up. You need display items, fixtures, furniture, all these different things that you need to consider. Again, if you should be putting all of these things in your business plan, so that before you even open the door up, or before you spend a dime, you know exactly what you're going to be investing over, say, the first year to 5 years of the business, and at what point you're going to be making money. And again, it's an estimate that you need to go on, and things are going to change. Now, where's the business going to be working? Is it an in-home business? Are you renting space? Is it retail space or wholesale space? Are you a merchant? Meaning, do I need a credit card system? Am I a mobile merchant? Meaning I need a wireless credit card system, and I'll get into some options with that in a few minutes. Is this an internet business? Do I need an internet presence? I use something called PrestoBiz, which gives you a rudimentary shopping cart and website for making sales. You have websites that you may need to create for your business. And then there's always insurance. Health insurance is a big nut there. I'm currently paying about $16,000 a year for health insurance, and there's all sorts of talk about with the government making health insurance affordable and stuff. Don't bet on it. You should probably get liability insurance, fire, theft. You may need mailing list software, $10 to $30 per month, and then whatever else specific expenses for your business that you need. Now, your accountant is going to help you identify what your expenses could be, and then you need to do your homework as to what exactly, where can you trim expenses and what expenses can you expect. Now, the next thing you need to know is you need to have a working knowledge of all the different areas that you're going to be involved with. Like I said before, you need to know. You don't need to be an expert in these areas, but you need to have some fundamental knowledge of accounting. If you don't, go to the library, get some videotapes out on accounting, take a class in adult education. Legal is the same thing. Learn some stuff about legal, and you'll start to run into these things as you go talking to people, joining different networking groups and whatnot. Now, for example, in some areas, if you don't have a sign out in front stating wherever you're doing business, whether it's at a craft show or whether it's in a store or out of your house, if you don't have some sign up that says this is XYZ company, then anyone presumably who's doing business with you is doing business with you personally, and that will hold up in a court of law. Now, that's different for every area. You need to check on your area, but that's just one example, which no one may tell you. Okay, they may just assume because they know it that everyone knows it. It's really good to know some negotiating skills. Again, go get some books on it. When I first started doing this, the only books on negotiating were how to negotiate employment contracts between companies and unions, which is great when you see how it works, but it's not always what you would use as a small business person. There's lots of shows on TV now that show people negotiating back and forth. I would suggest paying attention to them and learning some negotiating skills. Then you have sales and marketing skills you need to know. So now sales and marketing are both different, and we'll get into that in a couple of minutes on what exactly that is. And then, of course, you need to have your specific product knowledge that's in your area's expertise, whether it's a store or whether you're designing software or building cars, whatever it is that you happen to be doing. Marketing, the activity, set of institutions and processes for creating, communicating, delivering, and exchanging offerings that have value for customers, clients, partners, and society at large. That's from the American Marketing Association. So what does that mean? So marketing is getting your message out there on what exactly it is you do. If you have a store, you need to do marketing in the way of advertising, either print ads, radio, TV, whatever it happens to be, so that people know who you are, where you are, what kind of things you're offering them to purchase. Advertising. Advertising is a form of communication used to encourage or persuade an audience, viewers, readers, listeners, sometimes for a specific group of people, to continue to take some new action. So what this means is this is going to be a radio ad, a TV ad, or whatever. So I'm conveying my message, my marketing message that I created, in a form of an advertisement so that you come in and buy my products, whatever that happens to be. So if you're selling software to Fortune 500 companies, you need to be advertising in places that they read, either doing direct mail or whatever it happens to be, whatever the best form of advertising. Again, for advertising and marketing, you may need to go to an outside agency to help you do that, or you may need to hire someone with that specific skills if you don't have that specific skill set. How are you going to promote your business? Well, there's lots of different ways. With marketing material and with advertising. So with marketing, you need industry experience and skills. Obviously, whatever industry you're in, you have some skills in that area so that you can define what your product is and who you're going after to sell it to. You can do that with networking groups for your specific industry. You might join something called BNI, which is Business Networks International, which has chapters all over the country, and they're different business people. So let's say you're selling computer services, and someone else is a lawyer, and someone else is an accountant, and someone else works in a bank. You all get together once a week or once a month, and you just introduce yourselves and explain what you're doing, and maybe the banker says, gee, I have a customer who needs some computer work, and they refer people back and forth, and you do the same to them. So it's a way to get your name out there and get referral business. I belong to several different networking groups over the years. One of the networking groups, which was very beneficial, we when we met, sometimes we had closed meetings where we didn't invite anyone else from the outside. And what we would do is, at those meetings, each one or two individuals in the group would explain what their company does in detail, and then present any issues that they're running into where they don't know how to solve it. And then the rest of us in the group would throw out different ideas and kind of act as their board of directors, so to speak, and help them overcome an issue, which it becomes very beneficial because you're in business for yourself and you have certain problems that no one who you know may be able to help you with, but people in your networking group will have different skills and they're all doing presumably the same type of businesses that you're doing. You're a small business person and they have the same type of issues. You can do marketing on the internet with Facebook, Twitter, YouTube, and all sorts of other sites. And then with advertising, we have print ads, radio, TV, internet advertising, direct mail, email, which is becoming harder and harder to get any results from lately. And then referral business, which is always the best because someone's coming to you because someone they know had a good experience with you. And it never hurts to ask for referral business. And then testimonials. So if on your website or in your marketing material, you put down you did a good job for somebody, and you ask them to write a testimonial saying, gee, Jim was in here and he did this for me and he really did a good job at it, or whatever it happens to be. Tax laws. There's all sorts of things that you need to know about tax laws. And again, your accountant and your lawyer is going to help you with these. But you need to understand them because you need to be able to ask intelligent questions to your accountants and lawyers, and don't be afraid to ask them to explain what certain, what things you should be looking at. So you have corporation taxes, personal taxes, self-employment tax, payroll taxes, sales taxes, and then if you're working in multiple states, multiply that by how many states you're working in. Seems like it's overwhelming, but it becomes pretty simple once you get involved in the process. If you don't have any experience in that area, I would suggest talking to other business people, asking how they handle their taxes, what kind of issues they have and whatnot, and then talk to your accountant and your lawyer again about that stuff. And then finally we get to something that's one of the fun parts of being in business for yourself, and that's actually receiving money from customers, which doesn't hurt. I mean, we all want to solve problems and do stuff, but at the end it makes it more rewarding if we can actually show some profit for it. Now, how do you receive payments from customers? You can open up a merchant account with a credit card company, and there's different things to consider with a merchant account. I'll get into that in a second. You can use something called PayPal, which does electronic funds transfer on the internet. Anyone who's used eBay is probably familiar with PayPal. You can use something that's pretty new to the arena in the last few years called Square.com. And there's several services that are similar to that. I think QuickBooks offers one also. And that's a very simple way to take credit card. You can always take cash, and then you can take check. The issue with taking check is it could bounce. So you need to be aware of how to protect yourself so that you don't receive bounce checks. Now, when you're opening a merchant account, I have a merchant account. I'm a mobile merchant in the business. So we have a brick and mortar store, and then we have a mobile business, and we also have an internet presence. So for the mobile merchant aspect, I need to get a special credit card machine that's wireless, so that when I'm at a trade show and I take a payment, I can immediately know if the credit card passes or it gets declined. If this transaction is not successful, I don't want to find out the next day and have to go track down someone for payment. Now, a merchant account, let's say I'm paying 1.5% interest, not interest, sorry, 1.5% transaction fee on each transaction that I do, and I need to go out and buy a wireless credit card machine for $700 or $800. If I use something called Square.com, which was not available when I first started in business, it's only been available the last couple of years, and we've actually been looking at that. We use it occasionally for certain situations. And Square offers you the credit card clearing for 2.75%. Now, there's quite a big difference. It's 1.25 points more for using Square than my regular merchant account. So it's almost twice as expensive. Now, being the fact that I had to buy a credit card machine for $800, if I do Square, The Square account, well, if I open up the merchant account is not going to be more profitable than using Square at the higher rate up until the point when I make about $80,000 worth of transactions or something like that. So if I'm not planning on doing that much during the year, or if I don't think that's a realistic thing, because if, let's say you're doing $4,000 a month on credit card times 12, that's what? It's $48,000. It's cheaper if I use Square than if I go out and I buy the credit card machine for $800. So it's just something to be aware of. You want to look at how fast your money gets into your account in any one of the situations, and that may be a deciding factor to go with one over the other, and those kind of things. So there's a number of different factors. Those are just a couple that you may want to look into if you're thinking about taking a credit card. Something to consider. Many successful people have gotten bankrupt at least once. I've been close to bankruptcy. I've never been bankrupt, but it's as close as I want to get. When things are bad, or if you want motivation, just remember that Walt Disney went bankrupt 7 times before he was successful. So in his 8th try in business, he created Walt Disney World and Disneyland and all the other places, and he became the overnight success. But you think he would have given up after 6 times and said, well, this isn't for me, I'm just going to go work for somebody else? He persevered and then followed his dream, and then on the 8th time, after going bankrupt 7 times, he succeeded and became the man he was in the business. If you fail at business, don't knock yourself over. It's just you're getting a streetwise MBA. So instead of going to Harvard or Yale, and you're doing it on the street, and you're learning things that they really don't teach you at an MBA school. So not that I hope that you fail, but just remember that we learn by failure, not only by successes. The bottom line is you must trust in yourself. You have to have a desire to make it happen, and just remember that it may take 2 to 3 times longer than you think, which if you write a good business plan, you should have some contingencies in there. It may take 2 to 3 times more money than you think that you need, and once in a lifetime opportunities come by every day. So if you missed one today, just wait, there'll be another one along tomorrow. If you're looking for an opportunity or want to discuss one that you're in or that you're considering, if you contact me, I'll be happy to take a look at it. I love looking at new startup things like that, and I'll be happy to help you any way I can. I'll have my contact information in the next slide. If you're looking for an opportunity, I currently have some opportunities I'm working with right now, some business ventures where we're looking for self-motivated people who are entrepreneurial and can basically be guided, and we're helping them become successful entrepreneurs. I'm working with a little bit different venture for me. I'm working with a bunch of business builders, and we're seeing how many business builders we can create out of the pool that we have. So if you're looking for something, please contact me. Here's my contact information. If you'd like to get in touch with me, please email me at rich@richardsienna.com. There's my websites and YouTube and LinkedIn and Facebook accounts. Thank you for watching this video. I hope it was helpful, and please click the like button or post any comments, and I'd love to hear any questions you have or any comments. Please email me. Have a wonderful day. Thank you.